Good afternoon, Miguel here with the Winston Minute, our report at the market's close. And today markets continued their rally. I think we're in the fourth day now of consecutive days with U.S. markets up. The S&P pushed above its daily moving average of 50 days, so great indicators there. It hadn't breached since September. Good to see. Now we're sort of pinning this to some easing of the worries and woes of the trade issues between the U.S. and China. There's rumors coming out that Steve Mnuchin is advocating for easing tariffs. He came out and actually refuted the claims, but the WSJ was sort of hinting at, him giving those orders and those discussions of having an easier stance to negotiate from throughout different levels of diplomatic envoys with the Chinese. Now, let's keep in mind that since Donald Trump and Xi Jinping agreed on this 90-day truce to discuss and whatnot, markets are actually down 5%. The S&P is down 5%. So, some mixed signals on how the market is interpreting this, but we'll only know when it's over, right? The only other thing I want to talk about is Netflix, which reported at the end of the close. We follow it very closely, particularly Fabian, very big fan of the company, myself as well. But as he mentioned this morning, I'm a bit scared of the share. I think the growth has been absolutely phenomenal for the company. They continue adding new subscribers, which is very important. They continue to grow. They continue to spend cash on putting out quality content. But I struggle to see how an entertainment company can maintain this pace of growth, especially an entertainment company that relies on subscriptions. And there will be a level of saturation, and the company will need to evolve. It already is. They're raising the price of their product by a significant amount. I think it's going from $11 to $13, something like that. I think until it hits kind of a $20 per month, the price shouldn't be too much of an impact. It is a very sticky product. People don't just cancel it because of a couple of dollars. But right now the share price is tied to the number of new subscribers per quarter, much more so than the increase in revenue. So I was looking at a study. This was a survey projection. It's not a real number, but they were saying that for every dollar Netflix raises its prices by, they lose 8% of their viewers, but the revenue, the increased revenue due to the raising in price outpaces the lost revenue and loss of clients. So, interesting to see there. I don't think the roaring growth of Netflix will stop until that sort of collision point is reached where the revenue doesn't exceed the loss of viewers or something along those lines. And as I mentioned, that there's a great chart. I'll see if I can find it for you all that talks a bit about how each time Netflix reports the volatility that investors are used to. It's highly volatile, especially after reporting, very similar to Tesla, although not as violent. So we'll really get a picture of how investors feel about Netflix, I'd say next week. So hold tight and just let's try to see when that shift in number triage, however you want to call it, that shift in priority for investors comes. When is it going to move away from new subscribers to just pure revenue or pure sort of margin of beating earnings estimates? We'll see. That's all I have for tonight. Catch up with us tomorrow morning, and once again at the market's close next week. Good night.